Good morning, everyone. It's 10 o'clock and I'm here back for the Ask Sharon segment here live on Facebook. And I'm excited to be with all of you this morning. I'm excited to be back in my desk at my house with some familiar settings. So I'm not quite as technically challenged. However, it's always an issue with multiple things that I'm trying to process at the same time. So today I'm going to talk, we talk about assets, and that I talk about assets are sexy, right? My favorite word on earth is assets. Well, today I want to talk about your credit score and whether or not you think that your credit score is an asset or a liability. Now, your credit score we had when we were in school, we all get report cards. Well, once we get out into the real world, we're not getting a report card anymore. But our credit score kind of determines how well we fare in our adult life. It determines whether or not you get credit for doing things like loans for businesses or for your car, your home. It'll determine what interest rate you pay. The better your credit score, the lower the interest, because the lender is going to look at you as a lower risk when you have a high credit score. And so all of those things come into play. And yet, many people never check their credit score. Now, I'm going to be talking a lot today about the US system of credit scores, but whether you're in the US or someone else, remember if you're in another country, you probably have something similar there. And so what I'm talking about today is going to be as pertinent. It may just have different vernacular, but it's important for all of us to pay attention to our personal credit rating. And for ladies and gents out there, when you're married, you still each have your own independent credit score. One of my biggest warning signs for women who've been married a long time is, do you have credit in your own name? Just in the last few years, I've had several friends whose husbands have died, or a couple that ended up being divorced, and they had no credit in their own name, and it made things very, very difficult. And when you have a sudden death, you're already in high emotional state. And so you want to make sure that you have done everything in your power to give yourself a firm financial setting. And that is making sure that you have credit in your own name, as well as what you hold jointly with a spouse, where it's in your spouse's name, or, sometimes everything's in the spouse's name. And if he or she dies suddenly, you might be left out in the cold for a while before you can get back on your feet. And so your credit score is very important. Now, a lot of people say, well, what's considered a good credit score? Well, various people have different opinions, but I think it's important for you to think about, how far can you go with the credit score you have? Pretty much generally accepted ranges 720 and above, and it goes all the way up to 850, 900 is excellent. So you should be proud of yourself if your credit score is above 720. Good scores are kind of in that 690 to 720. People think they're okay at 650, but that's really average. 630 to 690 is average. And anything under 630, you need to work on it, because it's going to cost you a lot more money when you need money. And it's really an indication that some things have kind of gone awry in your own credit bill paying history. Now, exactly how is a credit score calculated? Well, that's kind of a secret mission, but in general rules, you have 3 different credit reporting agencies, and you have a right to get a free credit report from each of them every year. But typically the FICO score is something that you want to pay attention to, because it's made up of several different components. So for instance, 35% of it is your payment history. So have you paid on time? Have you paid your bills on time? And the answer to that, but it's also important to get that credit report. And then that's the 35% is your payment history. And then 30% is a very important one. And this is how much you owe. Now, when you have a credit card, you may have a $10,000 limit, right? So that's your credit line. That's your available credit. All right. And rule of thumb is you want to make sure that your outstanding balance is never more than 30% of what's available to you. And that's, kind of a cardinal rule. And it's important to know that, because if you have more than 30% borrowed against your credit line, then that's a negative impact on your credit score. Likewise, if you have a credit card that you've paid off and you cancel the credit card, that's going to impact your credit score negatively as well. So pay attention to that. You may want to pay it off. Absolutely. Get the balance as low as possible, but you may not want to close it until you can make sure you've got a balancing act with additional credit available to you. So for instance, I keep no balances on my credit card. So I pay them off every month. But I learned the hard way about 6 or 7 years ago. We were remodeling our home. And so I was putting all the fixtures, the light fixtures and the, faucets on my credit card each month, ceiling fans. And of course, so the balance would get really high and then I'd pay it off at the end of the month. And at some point during there, I ran my credit report, and it was like my credit score had dropped like 30 points. And, I was livid. It was down to 750, which has never been that low for me. And yeah, it's still considered a good score, but not for me. And I realized that the time in the month that you actually have your credit score run will determine how much of your available credit has been used. And so I may have a $30,000 credit limit, but typically I use very little of it. So that 30% rule is never a problem for me. But during that time period, I was, getting the miles, right? So there were times during the month when I had well more than 30% of my available credit charged for buying the things for my new house. So lesson learned, pay attention to what time of the month you're going to be actually needing to have your credit pulled, and make sure that you've paid down all of those balances before that happens so that you get the best chance of having the greatest credit. So that's 35% of your credit score is your payment history. 30% is how much you owe, all right, how much you owe against your available credit. 15% is your length of credit history. So if you're young and just starting out, you're going to want to establish credit as quickly as possible so that you have a lengthy credit history. 10% is new credit. How many times have you been asking for new credit? Because that can hit you. So for instance, when you're in the department store and they go, if you open a credit card today, we'll give you a 15% off of all your purchases today. And that could sound like a really big deal, and it could be very beneficial to you, but understand when you do that, that's a hard inquiry on your credit. And so that hard inquiry does impact your credit score for a while. So it's important always to think about how the positives and the negatives of each thing you do. And then 10% are other factors. Now, part of all of this is the type of credit you have. Is it credit cards? Is it a long-term home mortgage? Is it a car loan? Is it a revolving credit? Those things also go into play. But it's important as parents for us to think about this with our kids is, at what age can we help them start establishing good credit? What are some of the things you can do to improve your credit score? So I'm gonna share that with you as I keep going, but I thought we have quite a few questions that came in. So I'm gonna jump into the questions and then share things as we go. Here we go. Is your credit score an asset or liability? You probably know the answer to that, but if you haven't checked it recently, it's important to get a credit report from each of the reporting agencies, because there's, I think, a stat, I have it here somewhere. Where is it? 1 in 5 find errors in their credit report. Now that's this stat. I've heard it as high as 28 to 30%. And so it's important. You're the only one that can verify what's on there. So if there's a ding on your credit, you need to identify it and see if it's accurate. And if you can, reach out to try and resolve the issues so that you stay on top of your credit score. All right. So hello, Sharon. My name is Eric. I live in Madison, Wisconsin. I used to live in Milwaukee. I know you cover a lot of entrepreneurial topics, but I appreciate today's discussion about credit. Unfortunately, I have not been careful with my credit, and so I don't have a good credit score. I've done my own research about how long negative things stay in a credit report, and I guess I have to give it time. Are there other things I can be doing to improve my credit score while I wait for time to pass from my late payment history? Well, part of that, again, is being in communication with the companies that have dinged your credit. It never hurts to talk to them and ask. Obviously, making sure that your payment history currently is stellar. keeping again that available credit, credit that, you know, stuff that you, the balance of your amount due is under 30% of your available credit is very, very important. And then also look at ways to improve your credit score. So maybe you have a parent or a friend who has excellent credit and they would allow you to become a signer on their account. You will benefit from their high credit score. It will help bring yours up. Now, don't misuse that trust. Don't borrow against it. But again, that sometimes in the short term is a way to help boost your credit a little bit. And think about ways to pull those balances down below 30% or eliminate them. Look at the credit card that you have as the smallest amount. Pay that one off first. Don't close it, but pay it off. That gives you a little confidence and helps you look at other ways you can do it. There's ways you can raise fast cash to, again, apply that cash to your credit score so you can bring it down. And the other thing is just be diligent about it and vigilant. And when you get to that point where you think enough time's passed, ask them, call out and ask them if they would remove the ding from your credit so that you can have a little boost from that as well. Hello, Sharon. This is Patricia writing from Fresno. I've been employed for over 10 years at the same business, but I'm branching out to offer my own services. Once I get my feet off the ground, I'm thinking I may search for funding to help me grow. I would use the money to buy space for a storefront. I am sure potential lenders will look at my personal credit, but I'm wondering if businesses build credit too and how it plays into borrowing for business owners. As I establish relationships with vendors, will they report to a credit bureau? Okay. Again, yes, a business can establish business credit as well. And you start with your bank, make sure you're structured legally, and start looking at how you can establish credit for that business, whether it be through a lease of equipment, copy machines, things that are in the business that can establish credit for that business name using that EIN number, the Federal Employment ID number, so that you get some firm credit history. The bank can help you. You want to make sure you find ways to establish that and keep it going in a positive way. Again, if you have complaints against you, Better Business Bureau, that's going to hurt you as well. And so you want to make sure that you get that credit established. And a lot of times when you first start off, you have to personally guarantee things. And so it's going to be your business credit as well as your personal credit that are in play. And so it's important to balance that and keep an eye on both. Dear Sharon, my name is Karen and I am a credentialing and medical billing assistant. Due to an accident when I was young, I received money from a trust and have my last installment scheduled in 3 months when I turn 25. So I'm very sorry to hear that. I want to do something smart with the money, but I'm not sure if I should put it into an investment like real estate, or if I would be better off keeping it as an emergency fund, which I don't really have. I don't know a lot about investments, but know from watching your other videos that assets are important for creating wealth. Am I better off holding on to the cash and using debt to pay for my first asset? Well, Karen, that's a multiple tier question. So let me kind of answer it from a general perspective. I typically recommend everyone maintain an emergency fund of 3 to 6 months of your living expenses. And that 3 to 6 varies. Do you have a family? Do you have children? You know, what your responsibilities are, the size of your monthly expenses. And so 3 to 6 months as an emergency fund are very important. So you may want to think about that and then look at how you can employ the rest. Putting it in a savings account is not typically something I would recommend because it's going to, keeping step with inflation is very difficult these days with this as low as interest is on savings accounts. So you may want to be looking at ways that you can use it, whether it be a rental real estate property or other ways you can invest that money so that it gives you a higher rate of return. Now, I have debt on some of our properties that we own. And I always look and see what's the income I'm getting from the property and what's my debt load to make sure, I call it arbitrage, to make sure I'm still making more money from that property than I'm spending. And anytime I see that turn where it's costing me more money than I'm making, I'm going to make adjustments to make sure that it's still a positive impact on my cash flow. Therefore, it's still an asset generating income for me. And so you always want to pay attention to that. And so, but I would also recommend, Patricia, since you're new at this, is to get the education, start going to free seminars. If you think rental real estate might be something you want, start establishing your associations, your network, in that area so that you can learn from people that are already doing it. That'll help you find people that can help you source properties, help you analyze them. Don't try to do it on your own and be the Lone Ranger. Next question. Dear Sharon, my name is Karen and I did that one already. Howdy, Sharon. My name is James and I'm a recent transplant from Dallas to Indianapolis. I moved to a part of the city that is in transition and I'm looking to invest in a few properties. I have excellent credit. Good. Excellent. Wonderful. Celebrate. But this is my first foray into real estate investing. I have available capital from my own funds, but wonder if making multiple investments over a short period of time makes me look risky in the eyes of lenders. Or if I check all of their above boxes for good credit, down payment, and sufficient income to make debt payments, do they care about timing? Okay, so that's a big whopping, it depends. James, congratulations. It sounds like you are definitely in a position to play big. You sound like you're financially strong and sound, and you have excellent credit. So that's wonderful. And it's a wonderful time for you to start thinking how you can start leveraging and using get rid of bad debt, but looking at good debt to help you expand your wealth. And when you're looking at a transition area, focus on one type of real estate, whether it be multiple housing, multiple residential, or whether it's commercial, instead of trying to do multiple different types of real estate, because the rules are different for different types. And so first recommendation is you may do several properties, but make sure they're similar so that your due diligence process can be the same with each of them. And then as you're doing that, you're learning, so you're building your expertise. Again, just as I shared with Karen, start educating yourself, finding those connections, those associations. I bet if it truly is an area in your community that's in transition, there may be a neighborhood association, which is important because when you start going to that, you're going to learn about things that are changing, zoning, traffic patterns in that area that may impact the valuation of the properties you're looking at. And so that gives you kind of a leg up in understanding what's going on and opportunities. And you may even find those lenders that are active in that area can help, are more apt to be able to support you with your good credit. They are educated in the area. So I always say, get to know the area well, talk to other people that are there, just knock on doors, find people and start looking at other people that have invested there recently. And it's going to help you get some, intel on what it is that you want to do. Okay, so here's now my next question. I know you normally ask people to share their names, but I'm embarrassed about my situation. Not to worry. I would prefer to remain anonymous. Okay, fine, no problem. I recently ended a relationship and discovered that during the 6 months we were together, my partner opened multiple accounts in my name while also using my regular accounts that I gave permission for. You're not alone. This happens to so many people. I'm so sorry. Essentially, my credit has been destroyed. I know there are legal steps that I can take, but the entire process seems incredibly overwhelming. I found organizations that work with you to repair credit, but wonder if they really work. If they're just going to give me a checklist of steps and I have to jump through all the hoops, I'm not sure it's worth paying someone, as I'm sure with a little research, I can probably find the right checklists. I am sure you have never needed this type of service, but wonder if you know anyone who has used a credit repair company and if it's worth it. Well, Mr. or Mrs. Anonymous, you are definitely not alone. There's so many people in your shoes, and it just breaks my heart when I see somebody's trust being broken this way. But it happens so many times. So the first step is to really recognize that you get that individual off of anything and everything that they're connected with you on, so that you can start separating your credit from theirs. It's so important to do that. Now, part of what you can do again is open up those dialogues and that communication with each of one of the debtors that you're dealing with in the credit score department and anybody that has debt outstanding. And there are excellent credit repair companies out there. I often recommend that you look for one that's a nonprofit. So they're getting funds from governments, or they're getting a small percentage of what they're doing for you, but it's something that they're dedicated to supporting you more than they are dedicated to making a profit on their end. And so start there. You start with your bank. You know, again, it's all a process of you taking hold. And when you talk about, um, you're going to have to do the work anyway. You're going to have to do the work anyway. I'm sorry. This is not, you know, when you find yourself in a hole, the first thing is you have to stop digging. And I tell people it's not the credit card that's the problem. It's the person holding the credit card. And unfortunately, that person was your partner, and now they're gone. So you're left holding the bag. And so you're going to have to take some demonstrative steps to start repairing your credit and start looking at what you can do right away. Pull those credit reports, look for errors in the reports, see what it is that you can do immediately to try and start repairing your credit, because it's such an important it's such an important issue. You can't wait. You can't put your head in the sand. And that's what most people do. They want to become ostriches. They want to kind of ignore that it's happening. And I say, don't ignore it. You got to keep doing it. It's so definitely important for you to stand in your own power and take control of your financial life. And the only way to do that is for you to start taking demonstrative action so that others can see what you're doing. And then you'll find more people standing up to support you. So I see that Angela has posted our Play Big Movement Facebook page. Please join us on our Play Big Movement. It's a private Facebook page. So I want to invite all of you to come and we can talk about these more specifically as it relates to credit and credit scores and whether it's an asset or not. It's an important thing, each of you, to talk about how can you improve your financial life. And the first one is really taking control of it. And you take control of it first by getting your credit reports, reviewing them, making sure that they don't have multiple errors on them like so many do. And then ask yourself, you know, how can I take steps today, reducing the amount that's outstanding? Look at ways to have new credit lines open to expand the amount of credit, looking at that payment history, making sure you do everything in your power not to miss a payment. And when you have something happen, call the debtor, call the vendor, talk to them about it, see if they can help you out. I see a few people. Nancy, hello, Nancy, and Eric. Oh, my buddy Eric. I think you're here in town today, actually. And Karen, thank you for being with us. But don't feel alone. There's so many people that are struggling. And there are a lot of people out there that are doing credit repair that are not of highest integrity. And so ask questions, find out how they get compensated, and look for one that's not for profit. But don't try to do it alone. Get some support, get some help so that you can keep taking steps in the right direction. Next question. Thank you for this topic. My name is Heather. I'm currently a college student at Ohio State University. Oh, that's an excellent school, Heather. Although I have student loans, I've never used credit to make any purchases. I recently went to my credit union to apply for an auto loan, and they said I need a cosigner because I have no credit history of my own. Okay. I was a bit disheartened because I have friends who have bad credit and somehow managed to have auto loans. Isn't that the rub? I tell you, it just doesn't make sense sometimes. I didn't expect that it would be harder for me to get a loan than for them. No good deed goes unpunished, right? Are there ways that I can create a credit history for myself without having loans or credit card balances? Yes, you can get credit cards, but not carry balances on them. You'll charge a couple $100 and you pay it off at the end of the month, couple $100, pay it off at the end of the month. And so you're seeing that you're borrowing and paying it back. So that's going to help give you your credit. Have your cell phone in your own name, not your parents' name. Have your apartment lease in your name, establishing credit that way. Every step you can go along the way. Now, when you don't have credit already and you're having trouble, go to the bank and talk to them about a secured credit card. That's where they're going to give you a credit card that may have a $300 limit, and they're holding $300 of your money in an account attached to it, so that they have no risk. But that still allows you to show and build credit. And then the next step is to get a credit card in your own name. And it's always important to think about keeping your credit in your own name. Even as I said at the top of the hour, when you get married, when you have a partner, don't give up importance of you maintaining good credit in your own name. It's exceptionally important. And it's something that I cannot stress strongly enough. I just, we lost my brother-in-law, and his wife was totally dependent on his credit. And so it's been difficult for her to have to reestablish that. So please, please, please have credit in your own name. All right, next question. Aloha. Well, I hope you're not being hit by you're in Honolulu, but I bet you're still, the impact of that volcano is terrible. My name is Marianne. I live in Honolulu. My husband and I recently retired here. Although we both worked and I handled most of our financial matters, my husband has always been the primary account holder on all of our bank accounts, credit cards, and loans. Although I don't have any immediate plans for investing or major purchases where I am worried about credit, I have always wondered if it would be beneficial for me to open an account where I am the primary. Yes, yes, and yes, Marianne, that's exactly what I've just been talking about. It has nothing to do with your husband and his credit worthiness or your love or your longevity together. Heaven forbid something should happen to him and you find yourself as a widow. It's going to cause, you're going to be a high level of distress for having just lost your husband. And then you find yourself caught up in a financial tsunami. So it's important. Yes. And your husband, just educate him as well. So he sees that it's a way for him to build support for you in the event that something horrible should happen. And so it's so incredibly important to understand credit scores and the fact that each of us needs to have credit. I check mine, I check my husband's all the time. And it's something that, is a good reminder for me too, when I think about it, because Mike and I have been together for 38 years. And so, I have credit in my own name and I keep track on that as well as I keep on his as well. And it's something that we all need to do. And it's something that when you're looking at your various types of credit, it's also important for you to know that you are absolutely in control. There are actions you can take that can help you improve your credit immediately. And again, as I said at the top of the hour, also think about when you can, when you're using that credit. So maybe you're like me, you use your credit card. I love my credit cards. It's a great bookkeeping tool, but I pay them off every month so that I don't get charged any interest. And in fact, on the inside, they call in the banking industry, because of course they make money off of you when you don't pay your balances off, because they get the interest payments and late payment charges. And, but on their side of the aisle, they call me a deadbeat. And in that case, I'm happy to be a deadbeat because they don't get any income off of me. I make my payments on time, so they don't get interest from me and they don't get late charges. And so they don't look at me as their premier credit card customer because I'm not making them money, and I'm okay with that. And so think about it every time, when I talk about my oldest son, when he got into credit card trouble in college, we get into this trap of making that minimum payment, $15 a month, $25 a month. And it didn't take long for him to understand that even though he was making those minimum payments, the balance of his amount due kept going up because he wasn't keeping keeping up with how it increased. And so that interest on top of it, you pay forever. I mean, something that you could pay off in 6 months may take you 6 years when you're doing it through credit, if you're not making those payments and getting it paid down. So again, attack those credit cards, find the smallest balance, pay it off first. It's going to give you that encouragement and that excitement, that self-confidence to keep going. And more importantly, review your credit report. And there are now some credit review agencies that keep it, it's not a hard ding on your credit when you pull a credit report. Things like Credit Karma, it's free. I use it myself because those credit monitoring services will let you know when somebody's dinging your credit and when somebody's checking your credit. And those is an invaluable service, but there are others as well. Again, look for free ones, look for nonprofit ones where you have the opportunity to stay on top of it without costing an arm and a leg. And by all means, if you find yourself heavily in debt, stop digging the hole first, and then look at ways on how you can consolidate your debt because there's consolidation loans that can allow you to get rid of some of the higher interest rates, will make to multiple payments turn into one payment, as well as getting organizations to support you by potentially, a lot of credit card companies or other organizations that have long amounts of money overdue to them will consider a smaller payoff. So you may owe $1,500. Well, reach out to them and say, if I can come up with $500, will you write off the additional 1,000? Now, that happens a lot, and a lot of organizations will do that. There are tax implications to that, though. So in some fields, that loan forgiveness can actually be income to you, but maybe better than having the debt sitting out there collecting and growing in interest. And so again, there's so many pieces of your credit rating that go together, but take some demonstrative steps in improving your credit score today. First step is to get your credit reports from all 3 reporting agencies. Review them for mistakes. There are so many mistakes. Look at the payment history. Make sure the credit cards that are listed are still all accurate. If you have someone, a lot of times people keep others on their credit cards that should be taken off. An employee that leaves, make sure everything you've got listed is current and accurate as of today. And then think about how you can potentially align with someone else that if you need a short-term boost in your credit score. Again, I have people that get their parents to co-sign a card with them or add them to theirs because their credit rating is a lot higher, helps boost that credit score. Again, you do it by honoring them and making sure you don't use that credit. But each and every one of us has a responsibility, not just to ourselves, but to the people we care about, to educate our children about that. So if you have a teenager, think about how you can help them start establishing credit in their teenage years. And then the importance of them maintaining that and keeping an eye on it. In this digital age, it's easy to keep an eye on what's happening in your credit score. And so it's important to each of us to make sure we do that. And if you have elderly parents, maybe you're fortunate that they're both living, but you have the same issue. If one of your parents passes away, is the other parent, they have their own credit? Think about that, things that you can do today to help them get past that and get that established. It's a situation that just is more and more important each and every day. Talk to your bankers, find out what they can do to support you. Look at consolidation loans, look at organizations that are not for profit that can help you look at your debt. First debt to get rid of, bad debt. So we talk in another program about good debt versus bad debt. Focus on the bad debt first and get rid of that. We'll do another show on how to raise quick cash, things that you can do, working an additional shift, having a garage sale. Think of things you can do, turn hobbies into businesses where you can funnel that amount of revenue into getting rid of that bad debt. Because at the end of the day, your credit score is an asset or a liability. And it's up to you to shift it from liability to asset, so that it can help you, because it will give you peace of mind. And at the end of the day, as I say often, you're either a master of your money or a slave to it. And so I thank you all for watching today, and go out there and we're gonna post a reference to where you can go to how you can ask for your credit reports, because there are 3 reporting agencies and it's important to get them all. So if you haven't done it once a year, it's free. And if not, think about those credit monitoring things like Credit Karma that can help you. So have a blessed day. Love you all. Thank you so much for watching, and I will see you on the other side.